Alright, what is going on everyone? Welcome back to the channel. If this is your first time here, then welcome in. In this video, we're going to be talking about Hex, PLS, Bitcoin, and a bunch more. There's a lot to talk about, so leave a thumbs up if you like this kind of content. Be subscribed. Thank you so much for 4,000 subscribers, by the way. So next up, 5,000. You guys are absolutely crushing it. But yeah, let's go ahead and talk about... So first I want to start the video off talking about sort of some TA, some near-term TA on the Hex chart, then go into some longer-term TA comparing it to Bitcoin in an angle that I don't think I've ever covered on this channel, followed by some more of the PulseChain stuff. So if that sounds good with you, then let's go ahead and talk about, first of all, where we are now on the Hex chart. So if you pull up some drawings I made earlier, this to me over here looks like a clear bull flag. Now, the reason I drew this horizontal level over here was because it was the top of this ascending triangle that broke bullish, found support, right? We talked about this in real time, found support, and then we had this nice run up. And this run up, this nice sort of exponential local top, followed by this more or less falling parallel channel. Like we're used to these falling parallel channels. We're definitely used to them. If you take a look at where we are, there's something interesting. If you take a Fibonacci retracement from this level that we just kind of explained why it was significant to this local top, which doesn't need explanation. It's a local top, right? It should be self-explanatory. And look at where these levels end up. You have the 0.382 level right where these candles found support, which I find very interesting. It's also interesting how this level, the 0.618, seemed to hold as resistance. So could this be the bottom? I mean, I don't know, man. Never financial advice on this channel. I have no idea at the end of the day what's going to happen. And I'm not even the best TA guy out there. There are way better TA guys out there, like traditional technical analysis, way better. I'm not even that good. I find that my forte is actually in the quantitative charts. And that, more or less, that kind of forces you to take a longer term approach naturally. I'm going to go off into a rant here. But just think about it. If you're doing statistical analysis, like the quantitative stuff on LookIntoHex.com, then you kind of, not kind of, but there's this concept, there's this general rule of thumb that the more data points you have in a statistical model, the more insightful it is. And so in that sense, you get more data for your statistics the longer the time passes. So you're almost forced into this longer term picture that you're always looking at. Just a fun little note there. So just a disclaimer, I'm not the best TA guy out there by any means. So if you thought that, I'm sorry to disappoint you, but I'm not. So yeah, this to me looks like a bull flag. And if we take our target, right? What does a bull flag usually hit? Well, once we break this flag, if we do to the upside, hold it as support potentially, and actually rally, we could be looking at closer to the the 28 cent level or so. So closer to the 30 cent level by, it's looking like 21st of August. Now our technical target for this region over here, I think it was off by a few days. We can actually measure it real quick. Oh yeah, we were saying 12 to 24 cents. Wowza. And now, yeah, I remember those days. Do you guys remember when our target was 12 cents, and if we double our technical target, 24 cents? Those were the good days. What, like 2 weeks ago or like last month? But I mean, we did that, and we're in this region now. And we actually hit the technical target like 5 days late, quote unquote, and then hit the kind of the actual peak local top like 6 days late. So just one day after that. So pretty good. Just 5 days. So if you take a little bit of margin of error in terms of time, you could be looking at close to 30 cent hex by the end of August. I mean, that seems reasonable. It doesn't seem too unreasonable based off of past performance. Now, past performance isn't necessarily indicative of future performance, so keep that in mind. But I like to see bullish signs in the chart. as I'm sure you do as well. So let's continue on to this other model. It's a pretty simple one. It's your 20-week moving average and your 21-week exponential moving average. And this gives you a sort of ribbon that on Bitcoin has been significant. If you ask anyone what a significant moving average is on Bitcoin, they'll probably tell you the 200 a week, generally bottoming regions, or the 20-week, which is your more or less line in the sand, whether you're in a bear or a bull. It's a really simple way to determine. It's not that accurate, but it more or less has held pretty dang accurate enough for some insane gains on Bitcoin in the past. So that's the reason I have this chart up here, okay? And first of all, let's take a look at how impressive these first cycles were for Bitcoin. This goes way back, October 2010, all right? We were at a penny on Bitcoin, and then it rallied up into June 11th to about $31 per Bitcoin. So that's about a 3,000x, followed by a nasty, and I'm talking 93.75%. That's almost a 94% correction. It's a brutal, right? The market was more liquid at the time. Maybe it was just, I mean, look at this. This just went straight up, so it found a correction. But keep in mind, there have been other charts in the past that have dropped 95%, like Ethereum's chart has, Amazon's chart has. I've actually pulled this up myself and scrolled all the way back. I can't remember what year, but it was, you measure it, and 95% crash, man. So just to kind of point out that ever since Hex has existed, its largest crash has been only 86%. So it's winning in that sense. It's winning in that sense. Now, if you pull up the Bitcoin chart again, the reason I have both of these circles laid out here was based off of this chart. And if you watch the channel, you are very familiar with this chart. It's your Hex versus BTC ROI from launch. It basically plots both Hex and BTC from their respective launch and normalizes them to 1 so that every price point on the blue curve is relative to launch day price for Bitcoin, and every data point on the pink curve is just the ROI relative to day 1 price for Hex. So you get a chart like this, where clearly there have been regions where Hex underperforms, regions where it more or less hugs Bitcoin's historical performance, and then regions where it overperforms, right? Like where we currently are now. It's very impressive in the sense that, I mean, just look at where it is now. At this point, Bitcoin had dipped 95%. It was barely coming out of the depths of its bear market and was finally kind of recovering before its next bull phase. Now, something really cool about Hex is that it's never fallen 95%, and it's never really had a sustained bear market. Like, we seem to have very quick, sharp corrections, like the one I pointed out that was an 86% correction near and around Big Payday that only took 3 weeks. And we're talking about this correction on Bitcoin lasted, 6 months? And I mean, you can attribute this to the better design where you don't have miners dumping the coin all the time. And I'm talking about all the time. So you just relieve that pressure on your price chart, and it can just, in my opinion, right, none of this is financial advice, but it can just go up faster and harder. Like it was designed to do so. There's a logical explanation as to how it was designed to do so. And if you look at the charts, it looks like it's doing so. So you have yourself, you have yourself a solid case, a thesis, if you will. You have yourself the evidence, and I mean, extrapolate from there, right? That's all I'm going to say. But yeah, man, the reason I brought up these two circles, now remember on the Bitcoin chart, these two white circles are because this is where we are in terms of time for Hex. So you are here. And in terms of ROI, Hex is around here. These are rough, right? Approximately, give or take a few weeks. But time-wise, we're here. ROI-wise, we're here. So in either scenario, we're still early, right? Do you wish you would have bought Bitcoin at $4? Probably. Do you wish you would have bought it at $30? Probably. Maybe $30 over here and not here, but you get what I mean, right? Even if you bought here at 30 bucks, you know, if you waited a couple years, you would have been break even, and then waited, what, a few more years, you would have been up like 1,000x. So I'm going to get to this 20-week moving average support right now. If you look at once Bitcoin did this business that we just covered and actually found support on its 20-week moving average for the first time, or for the second time, excuse me, because the first time was over here. So it had its bear market. It had its, first of all, it had its run up, it had its bear market, it had its recovery, sort of bull flag recovery into support on the 20-week moving average. And once we did break it and hold it as support, we ran up another 246x or so. So that's why I had this pointed out on the Hex chart, where we broke our 20-week moving average around, you know, December of last year, and actually held it as support, because we were above it here, but we didn't hold it as support when we tested it. We did here, but then this was a failed rally, which dumped us back beneath it. So I'm talking about when we legitimately broke it and started holding it as support back here, December 2020. Then we're only up about, what is that, like 40x? Only up about 40x from here to this local top, and currently only up about, you know, 23x or so. And so again, Bitcoin did 240x when it finally recovered from the dip and then continued on. So Hex has dipped less. It seems to do it faster, recover quicker. It's outperforming BTC's historical performance from its launch. If you put the charts next to each other, what comes next could be anywhere from 50x to 200x. This would put Hex in the dollars, right? We'd be in dollars. And yeah, I mean, even if you argued that this is an even more bearish scenario, even if you argued that Hex was at this point in time, and this is a very strong kind of devil's advocate case, because Hex isn't as liquid as Bitcoin was over here. It hasn't existed for 5 years, right? It's definitely more so just 1.5 years old. So it's not as economically heavy, it's hard to push up, it's not as liquid. But even if you were super bearish and said, well, maybe it's just all the way over here, well, Bitcoin still did about a 75x. So even like that worst case, just multiple standard deviations away from the mean kind of scenario, you're still looking at the fact that we could have a 2 to 3x left, right, to fulfill maybe that 10,000x at 56 cents. So I don't know, man. These are just my thoughts. Like I said, this video was going to be a little more thoughts everywhere, less structured, but nonetheless, I think a lot of you guys do find this stuff valuable, so I will continue to make these videos. And that was more or less the analysis on the Hex versus BTC. I just find this whole case, right? You can build really strong cases around Hex versus BTC or Hex versus ETH, as we did in the last video. So I think that's really interesting. So just to kind of finish the video off on some more fun stuff, the PulseChain sacrifice address has a shit ton of Hex, right? It has like 3.07 billion, which is about 400 million bucks. If you look at the time of sacrificed value, you're sitting on 660 million on the Ethereum chain, about 20 million plus on the Bitcoin chain, about 20 million plus to Sens, and more millions in Cardano and a bunch of other coins. So you're looking at 700 million plus dollars of value real time sacrificed in less than like 11 days. I mean, this might be the most raised in terms of capital divided by time it took to raise it, because I know EOS, those guys raised like $4 billion, but I think they did it over the course of a year. So if you take 4 billion over 350 days, you're looking at, I don't want to do this math. Hold on. So what did I say? 4 billion 1,000 million over 350 days or 365 days, you're looking at like 11 million a day. So sacrifice phase lasted 19 days. So on average, in 19 days, the EOS guys raised about 200 million. So you see what I'm talking about? There's potentially, well, already about 700 million, potentially a billion by the end of the phase. So we're looking at a higher ratio of raised capital over time. So that would just be the speed of raising the capital. So this might be the fastest you've raised a large, like 100 million, billion plus amount of capital. I don't know. I think this breaks records. It just looks impressive to me. I've never seen it, but I'd really be interested in what legitimate records this is breaking. I wouldn't be surprised if it did. But that's pretty much it. If you want to follow these charts yourself, like the Hex versus BTC chart, feel free to go to LookIntoHex.com, and you have all your charts, your regression rainbow, heat maps, Hex versus BTC and ETH, quarterly ROI for value, all this awesome stuff. Some new PulseChain charts, which I should probably mention. Here, let's zoom this back out. That these PulseChain charts, for example, the sacrifice phase, let's actually zoom back in. I'm probably going to take this page down once the actual phase ends, right? Because at that point, the bonding curve doesn't matter anymore. See, sometimes I want to zoom in to like show you guys, but and then it tweaks out like that. I don't know if you run into that on your own desktop. Let me know in the comments below. I'm just going to reload this. But what I was saying was that I might take this page down because at that point, you don't, this bonding curve doesn't really matter anymore at that point, right? We added this cool little hexagon to track it real time where we are in the bonding curve. And yeah, so this chart more or less makes sense to take down at the end of the phase, so in about 6 days, as well as the PLS pairs, because this here attempts to give you an analog of dollar value before there's an actual market. But after PulseChain sacrifice phase is over, we have testnet, all that good stuff, counting up, doing all the math for assigning points the right way and all that. Once all that is done, you'll actually have your markets. So you'll be able to see these charts on an actual trading view or Dex.Vision type chart. So you won't need this anymore. It'll be much better once that's the case. So at that point, we'll probably clear up some space on the site, maybe add some new charts. I have some ideas. I'm hesitant because I know some other community members are trying to do some stuff with T-shares and all that. So, I mean, I could have that ready literally in like a few minutes. But yeah, let me know in the comments what you guys want. Like, what kind of charts do you want to see is a good question. But yeah, leave that down below. With that said, we'll wrap up this video. Thanks again for watching. Let me know what you think of all of these cases we made, the Hex versus BTC case, including the 20-week moving average support and ROI from there. And let me know what you think of PulseChain. If you've already executed your strategy, if you wouldn't mind sharing maybe, but obviously you don't need to. Leave that down below, all that stuff. I'm always keen to hear whatever you guys have to say. So again, appreciate y'all watching, and I'll catch you in the next video.